morning, I'm Maiki Oreta, and you're watching Business 360, where we break down the numbers, connect the dots, and give you the developments and the insights you need to navigate, adapt, and lead. Let's dive right in. The headlines. First, Malacañang calls former President Duterte a one-man fake news factory after he claimed that President Marcos Jr. is veering towards a dictatorship. In a significant boost to our financial credibility, the Philippines has been removed from the Financial Action Task Force watchlist, a decisive move expected to reinforce global investor confidence. Roman Catholics around the globe are praying for the recovery of Pope Francis, who remains in critical condition. And finally, President Volodymyr Zelensky offers to step down if it means ending the fighting in Ukraine. All these stories and more coming up. First, let's take a look at how financial markets performed last Friday. U.S. stocks tumbled Friday, extending their sell-off amid dour economic reports. U.S. President Donald Trump has indicated that new tariffs on lumber and forest products will be announced this week, aimed at curbing imports. Market experts warned that these tariffs could further inflame market volatility, potentially impacting global trade and investor confidence.
Today, you get flash PMIs that show maybe the economy is a little bit weaker than investors anticipated, particularly on the services side of the economy, which has been a big driver of growth. And that's all it took. Markets reacted a little bit negatively, a little bit of whiff or fear of stagflation again, with inflation remaining steady and some of these growth metrics coming in a little soft, retail sales in January as well.
Wall Street was sharply lower. The Dow Jones Industrial Average lower by 1.7%, the S&P 500 down by 1.7%, and the Nasdaq down sharply, down by 2.2%. Now, markets in Europe are mixed, with the UK's FTSE flat, down by less than 0.1%. Germany's DAX lower by 0.1%, and France's CAC 40 also, down by 0.4%. Here at home, the rift between the current and former president intensifies as Malacañang calls former President Rodrigo Duterte a one-man fake news factory after he accused President Marcos Jr. of heading towards a dictatorship. Executive Secretary Lucas Bersamin lashes back at Duterte, criticizing his bloody drug war and claims of disinformation. Bersamin asserts that the Marcos administration will not repeat the oppressive practices of the previous government, where critics were jailed on trumped-up charges and kill orders were blindly followed. At a rally in Mandaue City over the weekend, Duterte claimed that Marcos would stay in power beyond 2028 and impose martial law, much like his late father, Ferdinand Marcos Sr. The divide between the Dutertes and the Marcoses has deepened over several issues. This political tussle raises concerns among investors, as political stability is essential for a robust business climate. Experts remain hopeful that transparent governance and sound economic policies will ultimately restore confidence in the market. Heads will roll. That's the stern warning issued by the Bureau of Customs after reports emerged that some agency personnel were involved in the attempted resale of 270 million pesos worth of smuggled cigarettes seized from Capas Tarlac. BOC Commissioner Bienvenido Rubio has ordered an immediate probe by the Customs Intelligence and Investigation Service. He also confirms that the agency will fully cooperate with the National Bureau of Investigation's own probe into the matter. The smuggled cigarettes seized at the port of Subic between July 2021 and June 2022 were consigned to Hongsim International Corporation and Proline Logistics Philippines Incorporated. After being abandoned and referred for disposal in 2023, reports indicate an attempt was made to illegally resell them during a shift change of customs personnel at the port of Subic. This incident raises serious concerns about internal corruption, which could ultimately impact trade and undermine investor confidence. On another front, consumers need to tighten their belts as higher electricity bills are expected this March. The Energy Regulatory Commission has approved an 11 centavo per kilowatt hour hike for the feed-in tariff allowance, or FIT-all, a uniform charge applied to all on-grid electricity consumers to support renewable energy promotion. The RC explains that the rate hike is necessary due to the depletion of the Fit-All Fund resulting from low prices in the wholesale electricity spot market. Now, the Philippines is off the Financial Action Task Force gray list, a major win for the economy after nearly 4 years under increased monitoring. FATF, the global watchdog on money laundering and terrorism financing, had placed the Philippines under heightened scrutiny, making it harder for businesses to process international transactions, attract foreign investments, and access global financial markets. Now, the Philippines is delisted. Cross-border transactions are expected to smoothen. Investor confidence will get a boost, and the country will be in a stronger position to compete globally. But the challenge doesn't end here. The country must ensure that these gains are sustained to avoid falling back under monitoring. To understand what this means for businesses, banks, and the broader economy, we turn to someone who has been at the forefront of financial innovation and regulatory reforms. Our guest today is Lito Villanueva, the founding chairman of the FinTech Alliance Philippines and executive vice president, chief innovation and inclusion officer of RCBC. With the Philippines now off the FATF gray list, what comes next? How can the country build on this momentum and strengthen its financial standing? Hello, Lito, and welcome.
Good morning. Thank you for having me.
This is such a happy development for the economy, for the country. But what does it mean for the average Joe, the average Juan de la Cruz?
We've been waiting for this great news for the past 3 years. And again, kudos to the Team Philippines led by BSP Governor Eli Remolona, SEC Chairman Emil Aquino, and of course, Insurance Commissioner Ray Regalado. And, to your question, what would be the impact for the common Juan and Juana de la Cruz? One is having to, they will not be able to enjoy a much cheaper, cost insofar as remittance is concerned. I mean, the inflow, that we have over 12 million Filipinos overseas, and they've been sending money back home. That will now be, one of those positive things that we will be expecting. So one is a much faster remittance inflow, at the same time, a much cheaper charges. And we've been working on that with the government insofar as having to really push those reforms and for us to be able to be delisted from the FATF gray listing.
Mm-hmm. Yeah, this means less restrictions. And so for the average Juan de la Cruz, we're so driven by OFW remittances. So that means faster, more real time.
Yes.
They'll get it more real time, the remittances, and also cheaper. How much cheaper would you say?
Well, we don't have the absolute numbers right now in terms of the figure, but we
better
have
exchange
better
rates.
Exchange rate, definitely, and there will be more. I think in terms of higher velocity. I mean, meaning more frequent, transfers coming from our fellow Filipinos from overseas. And I think this will not only redound to having that benefit, for remittances, but also it would really impact on the inflow of investments into the Philippines because of that the listing, more foreign investors will likely be more interested to have the Philippines as as the right investment destination for them. And we've seen quite a number of fintech players who have actually expressed interest in investing into the Philippines. And I think that question before of do we still experience the investment winter for fintech players? I think we are seeing the end of it. We're seeing more and more investors coming to the Philippines, and this will definitely give an added boost for investors, given the fact that we are now off the list from the FATF gray listing.
Yeah, this is bullish for the equities market, and it's bullish for the peso also when we get more foreign direct investments on account of this. When will the broader economy start to feel the benefits of this? I mean, when will we start seeing the effect on the peso and on the equities? Probably about a year, right?
Well, I think we will be able to see the positive shifts, in about a year or so. Because I think the immediate impact would be, I think we will be able to see some good news from the stock market. I think that would be the immediate reaction, right? And of course, as you've said, the exchange rate will definitely will be more favorable for our importers, for example, and for our remittance players. or the senders of from our from our OFWs. But I think we will be able to see those positive results, no, in a given year. And I think, as I've said, the sustained effort of the regulations and when it comes to having to have that cooperation between the public and private sectors, in having to ensure that there's transparency, accountability, and of course governance insofar as reporting, monitoring are concerned.
Okay. Do you expect this, with our risk profile improving, do you expect to see better credit ratings for the country? And how close are we now to that coveted A rating?
I think we are very near that, that stage of having to achieve or having to have that the coveted A credit rating, upgrade. I think if we are to sustain our efforts in terms of having that, collaboration amongst all players in the industry. I mean, as you know, governments or the Philippine government and the regulators are the ones providing the framework, but the one to execute those frameworks or those regulations would be the private sector or the financial institutions. And I think with collaboration comes, of course, the partnership, the engagement of all sectors involved, all the stakeholders, and making sure that we will no longer go back to that gray listing,
it's a collaborative effort between public and private. And, we've been here before. We're on the list, we're off the list, we're on the list, we're off it. How do we stay off of it?
We need to sustain our efforts. And this time around, I think we have that, that awareness now of making sure that we need to sustain that efforts in terms of having to have that regulatory oversight and to have that collaboration amongst players in the industry. And I think, as I've said, during the time that when we heard this news about gray listing about 3 years ago, the approach of the former administration has been the whole of nation approach, meaning it is not just an effort by the government, but also an effort by all stakeholders within the industry. And I think we have done our best in terms of having to deliver that. And that's why the good news came even before, right after the
cut in the reserve requirement ratio. So yet two independent, very positive developments for the Philippine economy. This getting off that gray list, and plus the cut in the reserve requirement ratio, which is going to put so much liquidity in the system. Things are really looking good. So how would you say, I mean, you're with the FinTech Alliance of the Philippines. How would you say your outlook is now, given these positive developments?
We are very positive about it, very, very happy about the new developments because, for example, in terms of the cutting of the reserve requirements, I mean, this will definitely give so much liquidity in the system and providing more, investments into equities and having to provide more lending to our Filipinos, to our businesses, etc. And insofar as fintechs are concerned, I mean, of course, as you may know, a lot of fintech players are also into lending, are also into digital banking, right? So especially there is also a cut in reserve requirements for digital banks, and of course for thrift banks it's now down to zero. So I think this will now really enhance the capabilities of the industry insofar as having to provide greater access to credit for most Filipinos, and of course having to match that with enhanced due diligence using AI-driven credit scoring algorithm to be able to address more millions of Filipinos who are still, how would I say it, the new to credit individuals, for them to be part of the formal economy. So without us having, for example, one of the things that we've been promoting in the industry is on how we can get rid of the Filipinos away from the informal lenders or the loan sharks, etc. So we have this fintech, so we have these fintech players who provide more transparency, accountability, and again, a friendlier approach to our customers.
Well, the road ahead remains challenging, but it is littered with opportunity and now positive developments. So it's going to be very interesting, this 2025 and beyond. All right, thank you for your time, Lito.
Pleasure. Thank you so much.
That was Lito Villanueva, the founding chairman of the FinTech Alliance of the Philippines. We're taking a quick break. Please stay with us as we dive deep into the numbers and the narratives that matter most to your bottom line.
escuchar las noticias del concierto ayer al que no pude ir porque ya tenía entrada para ayer, ha sido reconfortante, ha sido increíble, ha sido maravilloso poder tenerla cerca y al menos así de cierta manera poder verla hasta que se reprograme la fecha cancelada.
Good evening, I'm Pinky Webb. Tonight we ask the questions, we tackle the issues, we clarify matters. How about the voucher program first? So what's your coordination with the local government unit? What is the problem in our education system? It might be a little hard to monitor this, but there has to be ways. Why do you think the president had this particular stance?
Impeachment is not a people's issue.
Pinky Webb is always on point. From the filing of candidacies until the last ballot is counted, your newest trusted news source, BNC, the Bilyonaryo News Channel, will be at the forefront to guide your decisions and guard your vote. Tune in to BNC's Election 2025 special coverage.
Welcome back. Let's take a look at how bourses in Asia are faring in early trade. Now, right now, the Nikkei 225 is higher by 0.3%. Hong Kong's Hang Seng Index sideways with an upward bias, up by 0.1%. Shanghai's Composite in the red, down by 0.2%. And Singapore's Straits Times Index higher by 0.3%. So not much movement either way over here in the Asian region. Let's take a look at how our stock market is doing right now. Early this morning at 10:21, the Philippine Stock Exchange shares are in the red. We're down by 0.5% to 60.70. The broader all shares index is in the red as well, down by 0.4% to 36.47. Only thing in the green right now is the financial index, which is higher by 0.6%. Perhaps following the cut in the reserve requirement ratio of banks that's going to be implemented. Industrial counter, holding firm services, mining and oil and property counters are all in the red. Now, analysts are anticipating a rally in equities this week driven by two major developments: the country's exit from the FATF gray list and the central bank's decision to lower banks' reserve requirement ratios. Now, on Friday, our PSE index advanced by 0.5% to close at 60.98, extending its weekly gains while investor confidence got a boost over there. Now, exiting the FATF gray list will enhance the Philippines' credibility in the global financial community, attracting more foreign investments. Additionally, the Bangko Sentral ng Pilipinas will slash banks' reserve requirement ratios next month, unleashing over 300 billion pesos into the financial system. This injection of liquidity is expected to fuel lending, spur investments, and support equities. With these favorable tailwinds, the Philippine market is poised for a rebound, offering a brighter outlook amid recent global headwinds. Now, at the foreign exchange market, the peso opens at 57.09 against the dollar from its previous close of 57.94. On another front, with dengue cases on the rise again, the Philippine Health Insurance Corporation affirms that essential aid is available to patients whether they are hospitalized or not, ensuring the well-being of our workforce, the backbone of our economy. Officials confirm that Consulta program offers free checkups and covers laboratory tests, while outpatient benefits are extended to patients experiencing severe symptoms and needing emergency care. Benefits for hospitalized patients have been increased. Mild dengue cases now receive 19,500 pesos, which is up from 10,000 pesos, and severe cases receive a big bump of 47,000 pesos, up from just 16,000 pesos. Over 43,000 cases have been recorded since January, marking a 56% rise compared to last year, with the highest numbers found in Calabarzon, the National Capital Region, and Central Luzon, where many affected are children aged 5 to 14. Defense Secretary Gilbert Teodoro lashes out at China over the latest incident in the West Philippine Sea involving a Chinese Navy helicopter, an event that raises regional security concerns. The details from Francis Folve.
Japan Defense Minister Nakatani Jen is currently in the Philippines. According to the Defense Department, he arrived in the country Saturday night. On Sunday, Defense Secretary Gilbert Chodoro accompanied him to Basa Air Base in Pampanga. Later in the day, they went to Wallace Air Base in San Fernando, La Union to inspect the radar system that the Philippines acquired from Japan last year. The air surveillance radar system is part of the PAPS radar project with Japanese electronics firm Mitsubishi Electronic Corporation, amounting to 5.5 billion pesos for 4 radar units, 3 fixed and 1 mobile. Philippine Air Force is already using 1 fixed and the mobile radar unit. The project also comes with radar support facilities, radar tower and radome, command and control building, communications infrastructure, electric power generator building, and housing for the mobile radar and its vehicles.
Domain awareness is extremely important so that we have a picture of what is happening on the airspace, principally on the airspace within our Philippine air defense identification zone. Because if we are not aware, then we will not know what threats exist. So we are making our capabilities stronger and more precise.
The project is under the Armed Forces of the Philippines Modernization Program. It is also part of the government's efforts to further develop, enhance, and sustain the country's air and maritime domain awareness. The air surveillance radar system can detect foreign vessels and aircraft with more than 300 nautical miles of instrumental range. With early detection of threats and intrusions within the Philippines EEZ, the Philippine Air Force will be able to respond promptly to safeguard the country's economic interests. Secretary Chodoro also had strong words regarding the recent incident of Chinese PLA Navy helicopters' dangerous maneuver against a BFAR aircraft in Bajo de Masinloc last week.
It once again demonstrates that China is not a party that respects any form of international law or any form of dependability or reliability, because they have not been a credible citizen of the world, so to speak, and that's the Chinese Communist Party. Their expansionism, their disregard of safety, and their disregard of the rights, particularly of smaller states, is now patent and for the world to see.
Chodoro adds they are considering to get more radar systems in the future. It is also important to strengthen alliances with like-minded countries, which is the reason why they are into the final talks on having a visiting forces agreement with New Zealand and other agreements with Canada and France. Meanwhile, President Marcos, Secretary Chodoro, and Japan Defense Minister Nakatani are set to meet today regarding regional security, bilateral and multilateral cooperation for the Indo-Pacific region. Francis Polbe, Bilyonaryo News Channel.
Around 2,000 employees at USAID were laid off over the weekend, with most of the remaining staff placed on administrative leave. The move is part of the Trump administration's efforts to reduce agency staff, impacting USAID's response capacity to global disasters. Around 2,000 employees at USAID were laid off over the weekend, while remaining full-time staff are now on administrative leave. This move by the Trump administration is part of a larger effort to scale back a federal agency that offers crucial humanitarian aid worldwide. Workers from USAID's Bureau for Humanitarian Assistance, the front line of global disaster response, are among those affected. Ukraine President Volodymyr Zelensky says he is willing to step down if it brings peace to Ukraine. He also suggested that his departure could be a trading card for Ukraine's entry into NATO. His remarks follow a sharp exchange with U.S. President Trump, who accused Ukraine of spurring the conflict. Zelensky emphasized that he seeks Trump as a partner, not just as a mediator between Kiev and Moscow, a move that could stabilize the region and fortify global business confidence. And that's it for Business 360. I'm Maiki Oreta. Keep it here on BNC, the Bilyonaryo News Channel.